Milan, on the last day of 2024. I'll be doing paper one and I'll be focusing more on question one. I've already recorded question two and three. And for question one, I will be doing question 1A, which is all about the VAT. You need to remember that VAT stands for value added tax. For every value that is added to the product, it will attract VAT. And VAT at the moment is charged at 15%. Now you need to understand that when you do this part of the question, we don't care about the amount exclusive of VAT. We don't care about the amount inclusive of VAT. We only care about VAT. So all you have to do is to use that information about inclusive and exclusive only to calculate VAT. So you only need to calculate VAT amount. And then you decide on whether that VAT amount that you have calculated, is it VAT input or is it VAT output? You got it. VAT output is what is due to SARS. So it goes out to SARS. VAT input is what we as the business are allowed to claim from SARS. So it comes into the business. That's why it's input into the business. Here we have information relating to Shah Soda. Shah Soda is a local company that sells personalized bottled cold drinks to companies and schools. A unit consists of one bottle of cold drink and the personalized label. That is one unit. They use periodic inventory system for all stock. I think that will be important for us when we calculate or we deal with inventory, which will be question 1B. We'll do question 1B in the next video. And they are VAT registered on the invoice-based method, which is what IEB actually uses. It doesn't use the cash or receipt based method. It actually uses the invoice method. So you calculate VAT when the invoice is received or issued, or when the debit note is received or issued, or credit note, that for that matter. And when, not when the payment is actually made or when the payment is actually received. We calculate it when the transaction takes place. Okay, you got it? We good? Great. Now, information relating to question one. We are told that VAT is calculated at 15%. Never assume. They must always tell you that it's calculated at 15%. Don't assume, please. They need to tell you that it's calculated at 15%. So highlight that. The information, the following transaction were taken from the accounting records of Shash Soda for the year ended 28th of February 2023. So we are looking at the year starting on the 1st of March 2022 to the 28th of February 2023. Now it says on the 1st of February 2023, the SARS VAT account had a credit balance of 7,500. Now, when we say SARS VAT has a credit balance, it means we are the ones that are owing SARS. And this takes you back to grade 9. Remember, liabilities increase on the credit side. I mean, there are three elements that increase on the credit side. But for now, I'll just focus on liabilities. And on the debit side, because this is all about asset and whether your VAT is an asset or it is a liability, it can be any other thing. So we know that if it's on credit, it means we are the ones that are owing. So that is a net VAT output, because output is what we owe to SARS. Input is what SARS owes us. So if it was on the debit, then we are going to say it is an asset. You got that? We good. Great. Then it says, number one, total purchases of ice 13,000 exclusive. That means that 13,000 does not include VAT. It is basically at 100%. It is not at 115%. It is at 100%. And this is on purchases. Purchases expense attract VAT input. So VAT that is calculated on those will be VAT input that we are allowed to claim back from SARS. We paid, but we are allowed to claim it back from SARS. So whatever VAT we calculate on that 13,000 will reduce what we already owe SARS. It will reduce that 7,500. Now, let's get into the calculation. To calculate that, as I've said, purchases will attract VAT input. We are given 13,000, which is VAT exclusive. To get VAT, remember when we do this table, when we calculate VAT input and VAT output, we only focus on VAT. To get VAT of this, so your numerator must always be 15 because that's what you're looking for. The problem is the denominator. If the amount given is VAT exclusive, then you divide by 100. If the amount given is VAT inclusive, then you divide by 115. Your numerator will always be 15. Unless it's given to you, then you don't need to calculate it. That is, if VAT is given to you, there's no need to calculate it. To calculate VAT on this 13,000, I will simply multiply that 13,000 by 15 and divide it by 100. That'll give me 1,950. As I've said, that reduces VAT. It reduces what we owe SARS. Remember that 7,500 represents what we already owe SARS. You got it? Good. Let's move on. A creditor who was owed 6,440 granted a 7.5% settlement discount when the account was paid. A creditor is someone that we buy from, purchase. And when we purchase, it attracts VAT input. Basically here, VAT input has already been calculated on that 7,440 when we purchase from this creditor. However, when we made a payment, this creditor granted us a 7.5% discount, 7.5% discount, meaning that we incorrectly calculated VAT input. Our VAT input has been overstated because we calculated on the 100% of that 6,440, and we're not supposed to have calculated it on that. You need to understand that that discount was never there when the transaction happened. It only was offered to us later on when we made a payment. And remember, VAT is not calculated when the payment is made. It is calculated on invoice basis, meaning that when the transaction took place. So our VAT input, as I have said, has been overstated. So we need to correct that. But before we can correct that, the fact that they gave us that 6,440, did you notice they did not specify whether it was VAT input or output? The general consensus is that that 6,440 is already inclusive of VAT. Because when you pay the amount inclusive of VAT. Now, we're not interested on that 6,440. We're only interested. So here it was a little bit tricky, and this is the trickiest VAT can ever be. You need to first find the discount. Even if you didn't understand me saying that VAT input has been overstated, you need to ask yourself, from purchases, what type of discount do we have? Is a discount allowed or is a discount received? From purchases, it will be discount received because it's us receiving the discount. And discount received is income. And as I've said to you, expenses and purchases VAT input, meaning that income and sales will be VAT output. Even though this VAT output, it is not us paying SARS, it's actually a reduction of VAT input. You got that? But it doesn't matter how you look at it, as long as you get it right. So as I've said, we need to first calculate a discount before we can calculate VAT. So we are going to take that 6,440 because they said it's what we owed. And you must pay attention to that as well. Because sometimes they give you the amount paid. When they give you the amount paid, it means that that amount is discount exclusive. You got that? But because they gave you the amount we owed, it means it was before the discount was deducted. You got that. So to get the discount on that, we're going to take that 6,414 and we will multiply it by 100. We'll multiply it by the discount of 7.5 and divide it by 100 because it's already at 100%. And then you will get the discount received of 483. And this discount, because it's VAT inclusive, to get the VAT amount, the numerator will be 15, but the denominator will be 115. As I've said, it's because it's VAT inclusive, and your numerator will always be 15 because we want the VAT. It'll give you a VAT amount of 63 rand. That 63 rand will actually increase your VAT output, which is what we already owe SARS. So it'll increase that 7,500. You got that? I'm happy. Clear? If you have questions, please leave them under description or just contact me on any of my social media platforms. Otherwise, you'll find me at Edify. So here there is information about Edify. So if that is if you need extra lessons and you want to nail this subject called accounting, I can help you do that, all right? Okay. Moving to point number 3. An amount of 2,760 was recorded as an allowance made toward data, and the VAT of 360 was recorded as such. Here you need to celebrate because you don't need to calculate the VAT. They gave it to you. Okay. And then they say on investigation, it was discovered that this was in fact a trade discount that was granted and should not have been recorded. So remember, on trade discount, we actually do not record a trade discount. So what happened here is that when we got that discount, we actually calculated VAT on it. And that trade discount, which is 2,760, we treated it as though it is an allowance. You got that? Debtors allowances, what is it? Automatically you need to know debtors allowances is a reduction of sales. But in short, debtors allowances is actually an expense. So that 360 was recorded as VAT input. You got that? And that was totally wrong. So we need to correct it. We recorded 2,760 and we were not supposed to have recorded it at all. Meaning that even the VAT on it was not supposed to have been recorded at all. So we need to reverse that. So we now know that that 360 was recorded as VAT input. So to correct it, we reverse that by recording it as VAT output, or you can just say it's VAT input, okay? And a trade discount, as I have said, should not be recorded. It is not recorded. Okay, so this 360 will result in the reduction. Actually, it has resulted in the reduction. So we need to reverse that. You got it? We need to reverse that. And for us to reverse that, we are going to record it as VAT output, which increases our VAT output. Got it? Remember, data allowances, VAT on data allowances is VAT input, but here we are reversing it. So you can call it a reversal of VAT input, or you can just simply call it VAT output, which works perfectly fine. All right, last one. A debtor who owed 3,680 was written off as irrecoverable. That is bad debts. Bad debts is an expense. VAT on bad debts will be VAT input, which decreases your VAT output. Bad debts will be at an inclusive amount, so that 3,680 will be VAT inclusive. You multiply it by 15, you divide it by 115, it'll give you 480. That 480 is VAT input, which reduces your VAT output. And that's it. Right? Crystally clear. Hope you enjoyed the lesson. Alright, in the next video, I'll be dealing with this, which is question 1B. It's all about inventory. Check it out, please. Alright, so you can start answering this if you want to. And this will be the questions. Um, try to answer these questions before I record this video. Okay. I already have November 2024 ready for recording. I'm just waiting for the results to come out and then I can post the video. I can't do it before then. Otherwise, IEB will sue me. Okay. I hope you enjoyed that. Otherwise, if you need lessons and you really need to get a distinction in accounting, or just do well in accounting, please check me out at Edify. Go to the website and I'll be available in any of those centers. Remember, I'll only be available based on your demand. So if you want accounting lessons, wherever you are, just go to the website and specify that you need accounting lessons and give me as a reference that you got the information from my YouTube channel. So wherever you are, I will come to that center to teach you. It'll be one-on-one. Well, it's individually based, even though there will be a maximum of 6 students in a class, but it's individually based. So I'll be addressing your concerns alone to make sure that you do well in accounting. All right. Otherwise, you will find me here on my channel. Ke re filo di jamela ka lebitso. Kgotso.